What's up, everybody? Good morning, good afternoon, good night. Welcome to the BitLab Academy daily stream, Saturday edition here. We're going to have a wonderful guest on breaking down where we're at in the market and when the bull market truly starts. We've got some excellent signals we're about to break down for you. So stay tuned. Hit that like button, hit that subscribe button, ding the bell, get involved with our community here. And I cannot wait to bring you this excellent guest. My name is Kelly Kellum, and I just have to say, welcome to the show. So without any further ado, let's jump right on in with our guest, Mr. Jordan Lindsey. How are you doing, good sir? How are you feeling? Thank you for being here.
Kelly, thanks for having me here. I always enjoy talking markets, and especially with you. I'm excited here to discuss markets with you all today. And what we're going to do is we're going to take something really complicated, which the markets are, and we're going to simplify it down. And I hope that you walk away from this today with really having just clarity of where we are now, where we're potentially going, and your signal for when this bull market really takes off. So let's start off, and you probably have seen this lately, and this kind of makes it look really easy. Is it really this simple? There's nothing simple about it. There's nothing simple about trading and investing. And if you look at just 2022 alone, you know that most people got it wrong. There were those that remained perma bullish throughout the whole downtrend, 75% drawdown, and they're buying every single bottom, exhausted by the end. You had those that were overly bearish the whole time, and at the bottom, they remained overly bearish, missing the run up over here. And we had a massive run up over here so far, 100% to the upside. Now, this chart here, this is ancient. I used this chart in 2019. It was like my roadmap. And I wonder today, as you're seeing price here off the bottom and price going straight up, I wonder today how a lot of people would analyze this and interpret this. Would they think that Bitcoin was going to be making new all-time highs this year or before the halving? Or would they be expecting a long accumulation phase? Now, we've advanced quite a bit since then, and I'm going to show you what we're looking at now. And this is more of probably what is an accurate interpretation of what we were just looking at. And I want you, Kelly, and everyone to focus right over here at the top of this accumulation channel. There's a very special level over there, and it's called the 0.786 retracement fib. On a log scale chart, if you just draw from the top down to the low, you will have this retracement. If you use the 0.786 retracement fib, you're going to notice a couple of important things. Prior to each halving, here's the halving. Prior to the halving, price was able to retrace off of the low all the way to that retracement fib. Last cycle over again, prior to the halving, price was able to retrace off the low all the way to that 0.786 retracement fib. Now, what I'm going to show you in just a moment is going to bring a lot of clarity for you. And it doesn't matter whether or not we're able to retrace before the halving, as this one and this previous cycle has before, or after. So I'm going to just make this a little bit simple and show you that this outermost trend line that you're looking at that I'm highlighting for you right now, you could see them over here. The bull market is confirmed once price breaks above that. Very simple. And you could see this time it broke out before the halving. This time it broke out after the halving. We don't know whether or not it's going to break out before or after, but once it does, that's the last bit of trendline resistance, and the bull market is confirmed. Now, it's certainly not the earliest. The earliest you can see in green over here, and this is the earliest potential possibility of the bull market. We called it out this year, back in December, as 17,250 as the bull market prediction. Wound up so far being correct. Now, we talked about that we're going to try to take something complicated and make it as simple as possible. What we're looking at here right now is when that bull market is actually taking off. It doesn't mean just because this has happened in the past that it will happen again. We will also look for where this time is different, and it could be different from many different areas. Now,
well, I wanted to point out for a second, if you go back to that last chart, on all three instances on that almost purplish line, that middle line, it seems like on every instance in the past two cycles, there was a price action push up to that region before ultimately it got rejected and then broke through it. Similarly in 2019. And then again, where we're at right now, we're actually just now testing, not even really testing that zone. So even if we were to have some sort of strong bullish impulse, there's high likelihood that we have some sort of interaction there if we don't pull back ahead of it. But the other thing I wanted to ask you about, so many people coming into the space early on, they're so concerned with getting in at the bottom and getting out at the top that they blind themselves with so many signals, they don't even know what to do. And they jump in on FOMO, they jump out on fear, essentially trading on hope. And my sort of argument with trading on hope is essentially if your strategy is to buy because you don't want to miss out on something, whether it's profits or losses, then you are literally putting your money in the market to donate it to somebody else's profits. If you trade with strategy, you're never really going to hit the absolute bottom or the absolute top. However, waiting on those confirmations and these signals that you're breaking down right here helps provide clarity on a little patience, yes, but also allowing you to wait for the price action to do the work to present the opportunity. So you're not jumping into something, you're letting the opportunity come to you. So what would you say, looking at this chart? We've had a strong bullish impulse. Do you feel like once we get that area broken on whether it's the middle line where your mouse is now or the top line, is there still gains to be made for somebody having missed so far from the bottom between 15,000 all the way up to, that looks like it's around 30, was that $39,000 there? Is there still gains to be made if somebody waits for that longer term confirmation?
Absolutely. First of all, there's a lot to unpack in what you just said, and so much of it is such high signal. A lot of people don't really want to hear the important things they need to hear to be successful. They just have these ambitions of wanting to make a lot of money with a little bit of work, and it doesn't work that way. And it's not just a little bit of patience you need a lot of patience. And you could have a strategy that is extraordinarily successful. Well, then you need the discipline and the psychological makeup to be able to follow it. So there's nothing easy about all of this. We do want to simplify it down. Your question is, are there gains to be made after, even this outermost level is broken? That that's that's really where it begins. Now, from where we are today, and Kelly, I'm going to try to answer your question first as quickly as possible, and then I'm going to build off of it. So I'm going to do that by jumping back over here, and we talked about the 0.786 level. Now I want you to see that these bull markets begin, like I call it the bull of all bulls running. When Bitcoin is you could say the bull market began down over here, but this is very uncertain times and we don't know what happens next. And I will give you an idea of what I think happens next, but I'm trying to give you an idea of confirmation. And if you go to where price touched that 0.786 retracement fib and you draw a line, and then you go to the next one over here and the same thing, you come back over to the 0.786 fib and you draw a line. Now look at that. And what do you see over here? I think I could draw something like this, Kelly, just to highlight it for you. And I'm going to go ahead and look for, right? I'm going to do it over here too. And so you were asking, is there still money to be made? And I'm going to say, well, the easiest or the most highly probable money is going to be made not down here where we are. We haven't cleared this resistance, 32,500. We haven't cleared the resistance above it, right? And, I know that desire to get in early, but here is the time that you're going to see not only Bitcoin running, here is the time that if you wanted to speculate out there in crypto, in the altcoins, that is when you have the highest probability. I call it an everyone's an expert phase because you could almost do no wrong. Now, there's a difference between getting in here and then getting out, right? And I know a lot of people who've made a lot of money and then lost it all. So again, the work never stops. But right now we're trying to, is that helpful in giving you a lot of clarity of what signal you're looking for the green light? And I'm trying to make it easy for everyone out there because there's nothing easy about it. And we have two things that we're focusing on today. First of all, when the bull market is confirmed, the break of the outer line. And then when the confirmation begins, when it takes off, and that's that move above the 0.786 retracement fib.
No, I mean, yeah, I think that's spot on. And I think what you're really highlighting there, and you just had so much to unpack as well. And by the way, I just want to shout out really quick, everybody, make sure you're heading over to not only my Twitter page, I meant to pull up Jordan's here. Make sure you're following when you're watching anybody do content online, make sure you're following the correct people because there's so many fake scam accounts out there for anybody doing content online. Come over here, give me a follow, and make sure you're following BitLab Academy here at Academy BitLab. And most importantly, the whole point of this little segment, make sure you're following Jordan here at Traders Mastery. And I'm going to share a little bit about what he does as well over here with his website, conquertrades.com. But I just wanted to shout that out because Jordan's sharing so much valuable information. But to your point there, I think, it takes a lot of work. We see people like CryptoFace doing $7 million trade. We come in 2 weeks in, we've done 3 trades, and we think we're pro traders. And then we do a 40X because we think the capital amount's so low. We're trying to keep up with somebody that's been doing it for a decade, decade plus or more. And they have not only the skills, the strategies, and the tools, but also the understanding of making money in markets isn't focusing just on profits. It's almost equal, if not more, focus on risk management. So these little areas that you have essentially circled on your chart present wonderful opportunities for profits, but also they tend to be about 75% of those, that parabolic action is essentially one of the most asymmetric risk off opportunities in the space. And that's what you really want to look for, especially if you're a newer trader. Don't dance around with trying to nail the bottom, because if you are a newer trader, it's highly likely you're going to get very emotionally triggered. And when you trade emotionally, every dollar you put in the market becomes more and more likely that what you're doing is donating it to somebody that has a larger portfolio. So yeah, excellent information there. And I'm going to shut myself up now. I want to hear more from you.
That's so well said. Please don't. I mean, it's so important to highlight everything you are highlighting. And yeah, that's all this is. This is a sweet spot zone, And a lot of people, we talked about early on how most people got 2022 wrong. And what you're looking for is to be able to, so a lot of people are trying to do as much as possible in a little time as possible. That's not the perspective you should be having to be successful at this game, right? Been full-time trader over 20 years. You want to think long-term, and you want to make sure that you are successful and you are going to be here, not just today, but tomorrow and for decades to come. So let's take a look at what's going on right now in that, in the right in front of us. And we were looking at that line, that first bold line was coming in right here at 32,500. We have horizontal resistance. We also have that trend line resistance over here. And then we also have this very important trend line that I'm highlighting. It's where the low of the US banking crisis was tested. It's where we saw the SEC bring that litigation versus Coinbase and Binance. And then BlackRock announcement kind of saved the day, touching that trend line. And we just touched into that trend line this week. And once again, it has held. By the way, this US banking crisis is also show another important trend line over here. And it's going to highlight it very quick for you over here. And you can see that was also the bear market breakout. This trend line over here, once price broke out, that was, again, a confirmation that repairs were taking place. And you can see it was tested here and then tested again. Once it was tested again, that's when we were able to draw in this trend line. If price breaks or loses and closing below this trend line, Kelly, we could be setting ourselves up for, at best, an accumulation phase. And there's nothing wrong with that. I know that a lot of people right now are talking about these really lofty expectations of something maybe like Bitcoin hitting new all-time highs and this year in 2023, or they're looking at maybe before
while quantitative tightening is underway yet. Yeah.
Quantitative tightening is happening. And not only, the last time that quantitative tightening was happening, we saw Bitcoin, obviously, we saw a couple of things happening. I'm glad you brought that up. We saw equities making all-time highs, right? and why equities were making all-time highs, Bitcoin was not. That's over here, right here. So at this point in time, this whole period right here into the halving, equities are trading at new all-time highs. In September 2019, the Fed started actually expanding their balance sheet again because the overnight repo market broke and equities literally melted up. Bitcoin did not. Bitcoin went sideways. It could happen again, even if equities are able to continue their run. We could see, because of the dynamics that are undergoing in the Fed cycle, we could see further pressure. So let's take a look at this. And we're talking about maybe there is some type of accumulation period coming up. We talked about like what we need to know. If we break above 32,500, that then opens up the door for potentially the next move up. That next move up could be somewhere between 37 and 40K, right? That would be nice. I hope it happens. I don't know what's going to happen. I just want to be ready for everything, right? If we lose this trend line over here, maybe we set up that long accumulation phase. Let's take a look at what that looked like. And if you were to take price and line up those past cycles from November, which was actually the highest price point of last cycle, November 2021, and line those up, you could see in past cycle behavior, you see that, well, this current cycle, it bottomed the same time as that 2016 cycle, the 2017 high. And then price right here, from here into the halving, kind of goes sideways. Now we see this event over here. This was the global lockdowns. This was a credit event. And you saw that Bitcoin came off. So the good news here is that let me take this a little further, then come back to this. All right. Do you got a couple of minutes for me to kind of get into it?
Yeah, absolutely. I do want to just shout out though, everybody. We're going to be cutting everybody watching this on BitBoy Crypto. First off, thank you for watching this Alpha series with BitLab Academy here on BitBoy Crypto. And also thank you to Mr. Jordan Lindsey here for his 2-decade plus of professional trading experience, and also in global equities as well. Now is I think he's more pretty heavily, if not predominantly, in taking advantage of the best asset class on earth. That's Bitcoin and the crypto market as well.
Let's do it. Let's get into it, because I want to show you what this line down here is and this line down over here. So to do that, let's have a little bit of perspective. I'm going to start over here, Kelly, and this trend line you might recognize. It's that trend line break that confirms the bull market of the previous cycle. Okay, I'm going to add in a line up over here, and I'm connecting that high to this April into May high, and I'm going to just go ahead and add that trend line over here down below.
Can you make those trend lines just a little bit brighter? They're coming through, but it's very soft on the screen share.
Absolutely. So these two trend lines that I've added, I just want to go ahead and show you exactly what I'm doing here, because it's going to make sense for the rest of this little bit of presentation. And all I did was I take a parallel channel, and I'm connecting this high to, you remember that April high over here?
Yeah.
And then I'm bringing it down off of the bear market low in December 2018. Okay. And that's a parallel channel line. And that's how I'm getting that line. I want you to know where that comes from. And then I'm going to go ahead and I'm going to add in another line over here, right? Well, let me make this brighter for you. If I make it brighter, I'll lose the presentation. So I'll do it at the end. So Kelly, I'm adding in now this trend line over here. And it's another parallel trend line. Do you see it comes off the bottom here? This is the global lockdowns low, and then coming up to this breakdown over here. And then I'm going to go ahead and I'm going to keep going. So I want you to, like, piece by piece, to see what I'm doing. And then it'll bring all the pieces together for you. I'm going to go ahead and add in this trend line over here. This is the trend line we've just been watching. We talked about that test of the US banking crisis, the BlackRock save, and if price closed below, where potentially we're going to run into further trouble on the downside or accumulation phase. I'm adding in now, these were technical breakdowns of the bull market.
I just want to pause you there for a moment, because I think what's so interesting with this, looking at this, and for anybody watching, what I'm finding interesting about this isn't that he's just drawing lines on the chart. We're not trying to just do art with price. What's interesting is the fact that all those upward angled lines, both the two tops and the lows, and additionally the steeper angled parallel channels or parallel trend lines. The interesting thing is that the angle of attack for where support and resistances are on different levels with different parts of the price action over time is lining up basically, essentially perfectly with the same angles of attack, which is really interesting. I do want to shout out really quick before we continue on. Everybody, if you want to understand what we're talking about, if it seems like we're just drawing lines on a chart, I really want to encourage you. The best investment you could make is an investment in yourself, an investment in your education. Whether you use conquertrades.com, which is Jordan Lindsey's platform, or you can also come over here to bitlabacademy.com. Whatever resource you utilize to bolster your education so you can understand how to read the narrative that price action is telling you, the momentum, the battle of the narrative between the bulls and the bears, what every candlestick's telling you, how to draw trend lines so you can get areas of interest that you can see where price is coming into support or coming up to resistance, how you can stack the probabilities in your favor. Me and Jordan and I right now are not just talking about pretty lines on charts. We're talking about what we see and where we can stack the probabilities in our favor so that we can prevent losing money, therefore more likely stacking profits in our portfolio. So I just wanted to shout that out, and back to you, good sir.
I mean, the best investment you can make, you'd be silly not to be investing in yourself because the markets offer so much opportunity. Isn't that neat? This line over here, if I drag it up, this is the line we were just looking at on that last chart together, right? If you remember, it was this line over here. Let me go ahead and just get this right for you. This line here is the same line that we're looking at here together right now when we look at this dotted line here. And if you drag this line up, it is the exact high from June into April. It's the same angle as you were saying, and throughout. So there's a lot happening inside the markets, and the more you become aware of how they work, it's just another edge that you get to add to your own personal interpretation of what is happening. And here you could see that if we were to break down, this was the first breakdown we called of the bull market, 53,140. And this was, take some profits off of the lows and begin de-risking down. This was another breakdown. And if you didn't de-risk up over here, it's not too late. And this was the last one that we called out, 27,000. And then again, we were able to find the low, not because of this trend line here, but because of, we were looking at the time, Kelly. This is where price found resistance. I know the all-time high for this cycle was up here, but this is where price found resistance. You could see that touch over there. You could see on the bull market breakout, it confirming into support here. And once price went below there, below the previous cycle ceiling, as it came back up, that was the first sign of maybe a bull market breakout. And the reason I'm doing all of this right now is because I wanted you to understand this line here, this trend line, as we were talking about that last chart and where it came from and why it's just not some random line. And that's this line here, Kelly. Okay. And the one below it that I have bolded, that is drawn in. It's the same trend line, cloned, but it's off of that spike all the way down to that March 2020 global lockdown low. And my interpretation is, if there's any type of credit event going forward, we know right now we're in the tightening portion of the Fed cycle. And we don't know if we're going to enter into a recession or not. If we enter into a recession, we don't know how Bitcoin will act and or if there will be a credit event.
So what do you mean, for anybody watching, what do you mean by credit event? And how can
credit
somebody,
event is basically
and what data can somebody look at to kind of check up on that?
Yeah, I mean, credit event, you could say that something is broken. You could go back to, you see this blue line over here. This is in March 2020, and you see Bitcoin just goes down 62% straight down. That was a credit event. Like the markets, the equity markets every day were just limit down. The Fed had to come in and they had to do this massive expansion of the balance sheet, $4.1 trillion, and just buy up all the assets because otherwise they would go to zero. And then they came in with that massive bazooka of QE, another each month, another $120 billion, $1.4 trillion for the next 2 years of quantitative easing. So credit event is things break, right? You can think back to also 2008 during the financial crisis, right? So it was the financial crisis, 2008, 2020. There's a long time in between. Our expectations is that going forward, these cycles are going to be a lot quicker and sharper. And we are seeing that. This is the quickest tightening cycle in history, coming off of that massive. So we're seeing sharper and tighter cycles. If there's a credit event, that we'll just call that like if there's an emergency, if
Okay.
something breaks, okay? And
Gotcha.
if something breaks, my interpretation is that likely we don't take out that low. Let me just come back over here and show you. And what I did over here on that one is I just cloned this one and I took it off the very low. You see, I think that this area, the bear market low of 2018 and into January of 2019, this was the bottoming taking place. It's like an Adam and Eve type bottom over here. That's not important. And then you could see that price, it wicked below there, but it found support on that same trend line. So I don't think that we're going to break below this trend line if we get into something bad. And
Right.
that means that likely the low is in right now, or it could be
So,
tested or
if you had to guess, I don't mean to hold your
yeah,
feet to the fire because predictions are really hard, especially in this sort of
yeah,
landscape of the market right now with so many questions about if something in the economy is going to break. Are the 7 tech
right,
stocks that make up 20% of the S&P 500? You know what I mean? It's like
yeah,
in the NASDAQ and all this, like there's things are very fragile, although it feels like things are performing well. It's not as many things performing well as it seems because of this imbalance within tech stocks and then the broader market. So if we were to see some sort of pullback, say we didn't get the golden pocket or the 786 pre-halving, which doesn't
right,
currently look very likely, and we were to
right,
get a pullback, where
right.
where do you think is the highest likelihood of price pulling back to? Are you in the 23 to 25? Are you 25 to 27? Or are you down testing somewhere between 17 to 20?
It's a great question. Um, so let me begin by saying I think that there will be at some point in the future an actual credit event. And the reason I think that is because in the next 12 months, the government has about one third of its short-term debt to roll over, and interest rates are much higher now. And in the next 24 months, they have about 50%. So I think that the reason this is all like tinfoil hat type stuff. And look, I excel on the charts and I'm going to show you where I believe the low will be in on just a normal pullback, right? Because I also don't think, I think this time is different, Kelly. I agree with you. I don't think that we're going to, we're going to tag the 0.786 before the halving. And we did last cycle before the halving, and we did the cycle before that before the halving. And now, if we break out this yellow line at any point in time, well, obviously, then that's highly likely and in play. And what's important, as we talked about earlier, is not if it does it before or after, but after it does, that likely once it then reclaims that, that's when the fun begins. But I think that the reason that JPOW kept interest rates so low and quantitative easing running and inflation running so hot, even gaslighting us and telling us it was transitory, was because they were looking to set up the perfect opportunity to roll over that debt in the future. And to do that, they needed the economy and everything to run really hot so that they could slam on the brakes. I think that their timing is actually perfect.
Hmm.
And my expectations will be is that there will be a moment of high of absolute fear and uncertainty that markets will indeed be crashing and the Fed is going to need to come in, lower rates down quickly. They're going to roll over that debt and then they're going to inflate it out again. And that's when we're going to see double digit inflation. That's my own speculation, but let me talk about the charts and what my expectations would be as far as where we would see a low. And before we do that, now that you understand where these lines are coming in and why they're here, and that was lining things up off November, and you could that's the all-time high, and you could see that right now that if we come back and test that first line, right, that we would not be making a lower low. Here's the low on Bitcoin this year in 2022, and that trend line would not be making a low. And during a credit event, we could take out that low and you could see that price from here today up until the end of the year, it could be a lot lower, right? You're looking here at something like $14,000. And the further we move forward, the less of a chance, right? Because as we move out all the way into October 2024, you can see that we're way above. Now, a lot of people believe that April was actually the high, the structural high of Bitcoin. I don't know which one it was. I consult them both. And price made the all-time high here. And you could see if April was the high and where we are now, that likely that low is in. Likely the low is in. And the further we go out, the less and less chance of that low being in. Except if you use April as the top, all the way to the halving, it's possible even in a credit event, in an emergency, that low could be tested. And we have seen that before. We have seen in previous cycles the low retested. Now, what I think is going to happen here is that if we break and close below this trend line, that likely sets up a move that could test this horizontal support. You can see that horizontal level. Let me talk about that level really quick. This is where we talked about earlier. This was the BlackRock save into the trend line, but it was also horizontal support. And that horizontal support is a big level. This is where Luna collapsed into. And after Luna collapsed, we saw the bounce. And then we saw the 3 arrows and Celsius takedown and price crash below the Luna low. Off of that Celsius collapse and 3 arrows collapse, we saw a rebound. And that rebound came all the way into the Luna low, right? And then you could see that was tested again, and it was resistance, and finally broke and has been retested once in that level. That's a big level. I think if we break this trend line, that we're coming down and that we're going to test that level again. I don't know if we take out the low. I don't know if we put in a higher low or what happens. But if that doesn't hold at this point in time, this is what I call the bull market invalidation. We had the bull market breakout. If this line were to break, I think it's all good and healthy above this line, right? And right now, Kelly, that could come down as far as, we'll call it just above, 23,000 to round up, and then upward sloping. And if that were to happen, I would think this is an extraordinarily healthy market and everything looks good. I don't know if we're able to break out over here and hit another leg up, or if we begin this long accumulation phase and what that looks like. But if we break down here, well, at that point, I think that technically something's wrong. And at that point is when we could be testing all the way down over here. Let's just call it 18.5 to be easy.
So let me ask you something, because obviously about not 2 weeks ago, my mind is broken at the moment. In June, we had the biggest, I would argue the biggest week. It was about a 10-day period. The two of the biggest stories in the history of crypto broke. BlackRock foraying into the crypto space with the spot ETF application. Very quickly followed, I think, the following week by the XRP summary judgment, at least for the time being, because we've seen some pushback from judges of it not being a security. And we see that we did not break the $32,000 level. So we just broke down a lot of sort of bearish case levels and things to be watching for. But Is there still an argument to be made after having the biggest week in Bitcoin's history and we weren't able to take out $32,000? What could be a catalyst? What would be a reason other than everybody thinking we're going down? What could get us over 32,000? And if we did get over 32,000, do you feel like it would have legs, or would you be watching volume and momentum like a hawk because you don't believe it? Is there any bullish case to be made right now, or are we just bears that, it's unfounded? What's your thoughts?
Yeah. I mean, Kelly, you always ask the best questions. That's why I so much enjoy really talking markets with you. Here, this candle over here is the XRP ruling. And you could see that Bitcoin, it closed at a yearly high. And on this day, the next morning, I put out a public video, and I said that, you know what, I'm really skeptical here of the price action. And if we close below 30,200, then a pullback is beginning. And so this was a big move, and there was a lot of speculation, and we wanted to see follow through into that next resistance level. That resistance is 32,500. It didn't happen. So you're saying, well, what happens now, and what could be the cause of bringing us into that? By the way, there's one other thing I need to point out, and that was right before the day before the XRP ruling, this down price bar, this was CPI. It was a high impact news event. And on this day, equities rallied hard on disinflation continuing to show. And that's not what happened with Bitcoin and crypto. So that was concerning. And that was why on that next move up, that was just uncertain. And it was because of the price action the day before. And we are seeing right now the quantitative tightening is running. And during this phase of the markets, there's a really good phrase that money flows into assets depending where they are on the risk curve. And we've seen since January, I mean, Bitcoin had a nice 100% move up, but Tesla more, and stocks have had a greater ascent. And that's because stocks are just less risky than crypto. And right now, it doesn't seem like the right time. And if you had to ask my expectations, then I'm going to build into that a little bit further. I would say my expectations are that either, depending on if you view November as the top, we're getting ready here soon for a long period of accumulation. Or if you're viewing April as the top, that accumulation is starting right now. So that would be my base case scenario of what to expect. And then we looked at that as far as, if this line breaks down, then maybe that accumulation could be all in this area, and that would all be good and healthy. What could bring this up? Well, you know what, Kelly, it's not so much what the narrative will be after, so much as what's happening. And, I'm a mechanical trader, right? So right now, let me just come down to the 8-hour where I trade this. I mean, we had a long signal yesterday. You could see we've been on the sideways market, out of the market. In the last 30 days, there was only one entry, and that entry was coming right off of that XRP ruling and then cutting that loser short. And by the way, my win ratio is only 40%. I expect 6 out of every 10 trades are going to be losers. I mean, you have to see this though. We talked about that low, right? How many people down over here were looking to go long at 16,000? It's not a question of what you think is going to happen so much as following momentum. And right now that momentum, on Bitcoin at least, triggered to the upside. Ethereum is still neutral. Cardano short. So there's a lot of uncertainty. Look, Kelly, it's not important to me so much as what would cause that upward move, so much as if it happens, right? So I try to really, really, really be the best I can at, I'll call it discretionary technical analysis. And that includes, trend lines, chart patterns, support and resistance. And, I put my money behind a mechanical system, and it's not so much as it's all about risk management too. It's not about being right or wrong. It's about understanding. Anyway, I don't want to get into that now, so that's not the time or place for it. But if you were interested privately, I would do that.
Yeah, no, I definitely hear you. So Bitcoin, we've been talking about Bitcoin for over 40 minutes now. You just mentioned Ethereum and Cardano. Cardano is an interesting, I don't want to call it a predicament, but interesting sort of sector of uncertainty because of the sort of, the shit that SEC's thrown at the wall there, including Cardano, essentially potentially being a security. But the community behind Cardano is incredible. I just shared some news earlier this week about the new the new integration that they have with CBTC, basically Cardano wrapped Bitcoin. There's still fundamental growth going on there. What would you say to somebody that's in the Cardano community with all this uncertainty right now? Would you just play it pretty risk off until there's a little more clarity there? Or is it worth something to take advantage of dips in this region?
So I think of it like this. I think of, let's Bitcoin, Ethereum, Cardano. And Bitcoin, you could say, has the most entrenched network effects, and that adoption continues. New wallet addresses, and those are all things that are very important. Ethereum, which is obviously the second largest altcoin there is, cryptocurrency there is, it has even more network effects than Bitcoin. Now it has different proposition, right? We're going to say that like Bitcoin is decentralized and Ethereum's not, and it doesn't matter in so much as that, look, it's a network and it's got massive amount of network effects. And because of that, these two are, we'll call the giants. Cardano has much less network effects than both of those, right?
Yeah.
So right now, in what is an area where there's uncertainty, and right now, obviously, Cardano, whether or not it's because it's deemed a security or just because where we are in the cycle, it's not really the time to be speculating in Cardano. And you know what? Just bringing it back over to here, this is when Cardano really ran up. It ran from, I don't know, I'm gonna call it, 10 cents, 20 cents to wherever it topped.
Yeah, near $3 or in that region.
And if you're really looking to speculate and not trade, trading's different, right? But if you're looking to speculate, I would have to say that, it's not the time. And likely you will see altcoins, maybe something like Solana, which has more network effects than Cardano, actually, come out of the gate much quicker. Now, I personally believe that when a time comes and that we enter into the phase when the bull of all bulls is running, that Cardano's it's gonna do well, right?
Yeah.
Will it be a leader? I don't think so, but I think it'll do really well.
It'll run with the pack, I think. Yeah.
Yeah, I don't think it's the time to be speculating in it. And now it's something I focus on regularly. I mean, Bitcoin, Ethereum, and Cardano. And I just want to show you this view just because it's important, and just so you could just get a look. And you could see over here, you could see right now, Ethereum's neutral. It's out of the market. Bitcoin is long and Cardano's short. And Cardano's the weakest of the bunch. During 2022, right? Cardano didn't have one buy trade. Bitcoin did, Ethereum did, made some massive gains even during 2022. This is not up here now, but it's important to see. Hold on one second. Here's the bear market, and Cardano is just weak in the bear. Here's where we came out in the bull market, or the bull market breakout, and Cardano finally putting in some buy side trades, but it's weak. The momentum's not there. So you want to be trading with momentum, not against momentum. Does that help?
Absolutely. Yeah, so much great information today. I think we're coming up on nearly an hour here. Is there anything else, any other charts you wanted to share that you feel like people may not be looking at, even if it's not Bitcoin? Is there any sort of traditional market charts you're looking at for Signal or more Bitcoin charts or whatever? We can kind of...
we'll talk about this one right here in front of us, and just expectations, because volatility has been historically very low right now. And why it's interesting, this is lining the charts up now from the halving. Why it's interesting that this current cycle peaked almost the same amount of days past the halving as the previous cycle. You could see that the low was almost, again, as many days past the halving, but out of the bottom, its price action has been resembling this 2012 cycle pretty well, pretty closely. And even though volatility right now is historically low, as it was back down over here, you could see that continued in 2 long periods. Even though this was upward sloping, and hey, look, I hope this is what happens. It's a lot easier to go through something like this than it would be something like this, right?
Yeah.
Mentally, emotionally, everything for all of us.
Conversations with families and neighbors. It's a lot easier on that than it is with the V-shaped recovery. Nobody recognizes the V-shaped recovery when you talk to them when they're not familiar with charts. They just know that Bitcoin dropped X amount. It's like, dude, it's already recovered and beyond where it dropped from, but all they know is, are you doing okay? You're like, yeah, I made a ton of money on that trade.
I'm glad you brought that up. We talked about a credit event earlier, and you know why? There's an area that we pointed out, and that was, look, you can see them on this chart as well. I'm going to just show you, like, this is the 0.786 retracement fib and price breaking above it. And then this is the 0.786 retracement fib and price breaking above it. And it seems off to me here, but don't worry about that. That's a great place to really speculate. But Kelly, if we have a credit event, and out of that credit event, the Fed's response is abundant, at that time, you see a lot of, like, I remember in March 2020, in April and May, a lot of people were talking about, like, this insolvency event that's going to happen next. And they worried about, like, the markets taking out their lows and talking about 1929, the Great Depression. If the Fed comes in with a massive response and starts outright quantitative easing again, that's likely also a really good point to come in and speculate hard. Okay. So yeah. I'm watching for both those things personally. If we have the more, normal situation, and once the bull of all bulls breaks out, that's a go light. And, or if things are bad, you see on CNBC, like, markets in turmoil, like, but then the Fed comes to respond. That's also a time where, look, there's going to be a lot of fear and uncertainty out there, but it's also a time where you could get yourself really well positioned. So something to look out for and be aware of. And then, that's it, Kelly. I mean, I think that's really what we wanted to focus in on today. And thanks for having me on. Thanks for the conversation.
Jordan, I appreciate you beyond words. You've come on to my Twitter Spaces, Crypto Answered, a number of times. Yeah. I've had you as a guest on BitLab before. I'm happy now I could share you both on BitLab and on the BitBoy Crypto show. I do want to say, anybody, I got a couple more things to say, but before we get into that, make sure, if you haven't yet, check out bitlabacademy.com. If you haven't enrolled, you can come up here, click enroll now up here on the top right. You can still use Give Me 30 for 30% off your first month if you go in to the all access membership, which is, you can see right here on the bottom right, I want all access. That gives you access to all the courses we have currently and in the future, as well as a premium Discord, all in one package here. If you want the premium Discord, all the courses, and the BitLab trading stack, you can get that all here with BitLab Pro. That's 30% off every single month. And I do want to just say, make sure you're following Jordan Lindsey here at Traders Mastery. And this is his website. You can check out all the things he's working on as well here at Conquer Trades. Now, I want to throw it over to you, Mr. Jordan Lindsey. Is there any other place that people can find you? Any other things you got coming up, or any last sort of words you'd like to share with everybody?
Yeah. I mean, your Twitter spaces, I really enjoy those conversations. You really facilitate what I believe is the best conversation that I'm aware of in the space online. I have my YouTube channel, or Twitter's fine. Twitter's fantastic. I enjoy interacting with everyone. I'm there for genuinely, sincerely trying to figure out the markets for conversations and for friendships. I'm not really concerned about follower count or anything like that. And I'm just grateful to be here today. Obviously, the website as well.
Well, I appreciate you, Jordan. And again, everybody, make sure you're following him over here at Traders Master, and you got all of his links right here on the top of his page. His YouTube link is right here. His website here is at conquertrades.com. You can catch him. We'll be having him back, I'm sure, regularly over the next several years, because I know a lot of the calls he made, everybody's going to be like, damn, I should have listened, because he's been in this a lot longer than I have. And I feel proud and honored that some of the calls that I make with what I'm seeing on the markets, essentially, like even looking here on the 8 hour, we talked about, where is it at? We talked about yesterday this potential 5 count that we were looking at with the Elliott wave, and then the ABC correction that would essentially, it's a different tool for analysis that was pointing out a very similar track that he was breaking down with other forms of analysis. So I want really to encourage all of you to get your education somewhere, whether it's from BitLab Academy, whether it's from Conquer Trades, whether it's from YouTube and scouring. Just at the end of the day, be ambitiously curious and get involved with your education so that you can take advantage of the best opportunity of your lifetime, that is in Bitcoin and digital assets. Make sure you're following me right here at Kelly Kellum, blue check, hit logo. And with that, big love to everybody. I hope you all have a wonderful day. Make sure you hit that like button, subscribe, join us here, and we will see you in the next episode.